And welcome aboard. Happy new week to you, wherever you may be in God's green garden on this 4th of July. Of course, that should ring a bell for everybody. Well, maybe not everybody, but those of you who are aware of American history will certainly recognize the 4th of July as their Independence Day. Formerly, well, they also call it Guy Fawkes Day, I think, don't they? Anyway, they let off a lot of crackers. I know that much. And of course, they're not yet in that position because it's not the 4th. Well, it is. It's early morning, I suppose, on the 4th of July over there. So if you're American, happy Independence Day. If you're not, then it probably doesn't matter too much, except that, of course, there will not be a US session this day due to the public or bank holiday. Hi, Paul P. Happy Monday to you too, bud. Thanks for joining us. Welcome aboard. We are now going to jump into the realm of the pound versus the US dollar and the breakout trade. Okay, I did say last week I'm going to change the rules on this one just a little bit, and I am. I'm going back more to the original system, if you like, which is like as old as the hills, if I can remember it properly. I think I've got it. So we'll go back to that system and see how we go. Haven't got any decent results on the systems that we have been using to trade it, but we'll see if this one gives us a better indication as to whether it's worthy of our attention or otherwise. All right. Before we go there, actually, I best alert you to an order I have in the market. It is US dollar versus the Canadian dollar, or the loonie, if you like. And I'm short. Well, I'm not short yet, but I have a short order in the market. If you wanted to follow that, I have an entry at 1.2865, and I've got a stop loss at 1.2975. And I'm going to take an early profit at 40 pips just before the monthly pivot there. And I'm going to remove 1/3 of that position. I'm only trading this, pardon me, at 0.25%. And the reason I'm only trading that at 0.25% is that I'm not really convinced that we're back inside this range yet. I think we're on the way, most certainly, and I'll be looking for price to get down to here, take out our TP1, then come back and retest the monthly pivot, at which point, if that is to be the case, I will scale into this and add to the position, thinking that we're going down to the bottom of the range, which is double really at the end of the day. I've got an ascending channel here, and I've also got a box range. Some of you will recognize this as potential for 3 little Indians to occur, and that's very true. That's part of the trade here. That's why I don't want to miss it. But really, as I say, it's a little bit early on that, because this hasn't been proven yet as a false break. Okay, we're back inside it on a daily basis, which is why I'm trading this bar, because we have come back inside and retested the weekly pivot of last week. So looks reasonable to me, and let's go with that. Pound versus the US dollar. So we better get into this fairly quickly. Righto, the new system is this. As I say, I'm going back to the old system, not the old system that I've been trading in here, but I'm going back to when I first started trading this about 14 years ago. Right, so what we've got to do is isolate the range of Asia session. Now, Asia session starts at the 0200 bar, which is 00 GMT. And once we've isolated that, that's it there. That's the session. So I've got to now find the high and the low of that session. There's the high, there's the low. We measure how much that is. You can do it accurately by the numbers, of course. We've got 30 pips of range. What we then do is put a marker halfway between the high and the low. So the high is 121.14. 30 below that's going to be 120.84. So we want to go 15 pips below 121.14, which is 120.99, which is there. Okay, that's going to be our entry point for a short. Why a short? Because we're above that medium line. So we're going to go short at 120.98. I'll take a pip off that, right? I better do this quickly, otherwise. Now, again, guys, this is coming from my memory, how this used to happen. So please don't put any meaningful money on this. It is very, very much a suck it and see thing. Okay, so I've got the entry already. It's pending order. It's a sell stop. So we're only going one way, right? We're not going breakout to the high side. We're only going one way. And the entry was 120.99. 98, sorry. 120.98. Stop loss is the high of the day, plus let's say 3 pips. The high was 121.14, so we'll go 121.17. And at that point, we'll be out of the trade if we get this wrong. And as I say, very, very small risk on this. All right, so that's in the market. Now, what happens next? Right, when we get 1-to-1, which would be, what did I say, 14 pips. Angus is a bit anxious out there. Sorry about that. 120.98 less 14 would be 120.84, right? Which would be, there it is. Bingo. 120.84, which is nice. Just before the daily pivot and pretty much on the low. That is 1-to-1 naturally. Righto, so if we get that 1-to-1, what I will do is take half off and do nothing else. Now, I think the original system or the way to trade this is to do nothing until you get a nominal target. Now, the nominal target that I'm going to use is 2.5-to-1. So that's going to be, what was it? 30 pips. 30 pips, so 75. 75 pips will be the target here. And that will be at 2014, 13. Okay, there's our TP1. There's our target. There's our stop loss. They're the only 3 things we need to worry about. So half off at that point, and then let the rest run. We will tweak that in need as the days, weeks, months, years go by. Or we'll do something different, depending on what the results are. Simple as that. But the things you have to remember is use the open of Asia session, which in most people's charts will be the 0200 bar. Pick the range of the Asia session and then find the halfway point. If you are above the halfway point at London Open, you trade short. If you are below the midway point on London Open, you trade long, and you put the entry at the halfway point. Stop loss at the top of the range plus a little bit of spreads, and your target, or your first take profit at the 1-to-1 mark. Second take profit, 2.5-to-1 mark. That's not the 1-to-1 mark, by the way. That's 14 pips. Got that wrong, didn't I? So I'm looking for 30 pips, aren't I? 30 pips from 84 be 54. That's better. No one pulled me up on that. How come? You've got no idea what I'm doing, have you? And I get it. That's okay. I will repeat this on Thursday, of course. But if you haven't got the idea, put it in the chat box and I'll fix it up later. I'll go through it again. But we haven't the time right now. Righto. The order, dollar CAD, if you just come into the room, short dollar CAD at 128.65, stop loss 110 pips above that, first take profit at 40 pips, just above the monthly pivot. And we are going short, selling dollar versus the CAD, looking for the bottom of the range here. As I say, it's a little bit early, so early in the position, early in the setup. So you only want to trade this at something like 0.25% and then add to it if we get this sort of price action. Hello, Ash.
Hi, buddy. How are we going?
I'm going good, mate. How about you?
Yeah, really good, mate. I might well have a trade for everybody. So shall I quickly grab the screen and we'll have a quick chat?
Sure.
I've taken it a little bit early, but it looks pretty good. So I'm going to add to it if it comes down a little bit. All right, let me do this. Let me do that. And do that. Okay, so it is for the FTSE. Let's clean this up a bit. So it's for the FTSE 100, and we can see here, I've taken it here, which I hate doing. It's right on resistance, but I wonder whether we might be just hot enough to kind of get up to near the monthly pivot. I'm coming out before the monthly pivot, but because of this potential line here, or I've set my target to come out before the monthly pivot. Really, the sweet spot on this one, and you know, I have my doubts with whether it's going to get here, which is why I've got in now. But I will add to it. The sweet spot's down here on the daily pivot, as you can see, because you know you've got this trend line here, and there's the daily pivot as well. But it just looked a bit hot when it opened up. It looked a bit hot. I should have tried to get in on the bottom of the bar, but I was still getting my system set up. So by the time I sort of got everything set up, this is the earliest price I could have got. And as I say, right on resistance, which is a terrible place really to get in. But my overall view is that the market is probably going to rally a bit today. Oh, gosh. Just realised I disappeared there. My overall view is the market is going to have a bit of a rally today. So yeah, so it's for long FTSE 100. I guess the price that would be on everybody's chart would be around about 72.40 for the buy, but the real price or the better price is around about 40 pips below. So you're really looking at 7,200 if you can get it. I mean, the option is just to put in an order down here, but some of the issue that I have is that if I'm looking at a market and I'm thinking, okay, well, there's the price. That's the price that I want. I have to look at the market and think, well, how keen is it? How keen does it look? What's the likelihood that we get down there before we go up first? And the judgment that I've made in this in particular instance is that I think we might push higher before we come down. So this may well be the best possible price. So, you know, I'll certainly get in here and take a punt on it and see if I get what I need. But, you know, as I say, the first target is the first contact for me. You could say it's here. So it might kind of come up and fail around about here. But this looks like the genuine kind of first contact at this point, because you've got a few touches along here. And then the obvious contact is the monthly pivot. So if you feel like, you know, it's going to go to the monthly pivot, then obviously stay in that little bit longer. I'm not really that bothered about that. So I'm just going to come out a little bit earlier and see if I can get some profit out of it. So that's the trade, mate. There we have it. We'll talk about all the other stuff later on when we've spoken to George and Simon if they're in.
Simon's got a power issue.
Okay.
What makes me think that's going to be a common occurrence in the next little bit? Or am I being cynical? I don't know. Because of look at that. I don't know why he's got a power issue. He's just got a power issue.
Let's just measure this up, mate. And you know, this we talked about this on Thursday. This was our trade on Thursday. We were going short on the FTSE after the head and shoulders pattern. Mm-hmm. Now I think this one played. It actually dipped a bit further down, but definitely seeing something else now. Are you still in the NASDAQ, mate? Because that should have turned around as well.
No, mate. I got out of the NASDAQ on Thursday night, I think it was.
Good stuff. Yeah, good stuff. I mean, you know what's really interesting, and if people don't really understand why the market turned around, have we got time to talk about this or not really? Should we talk about it later?
Look, I've got nothing urgent. I've only got my weekly stuff to do. We've got the order that I've got. They've got the order that you've got. So go hard, mate. George is. Okay. I think George is in. I saw a message on Skype, but I think he's in the room. So
okay, very good. All right. Just really quickly. Let's just sort of like, you know, discover what made this market turn around, or talk about what was the possible. You never really know exactly, but let's talk about what the chances are. This is what turned the market around, because it was fascinating, really. And this is where sort of, you know, some people kind of get a bit tripped up with fundamentals. The whole situation about inflation is driving the Fed towards raising interest rates. Raising interest rates is not good for the stock market because it kind of takes liquidity out of the system and it makes it borrowing more expensive. So companies can't grow, and you know, and that just kind of leads to this this big trail of destruction behind it. But what moved the market, interestingly, was on Friday, we get this number. ISM manufacturing PMIs, 53. So getting very close to the 50 level. You know, it's not that far away from the 50 level. More notably, it was 56.1 last time, aiming for 54.6, and a big dip in that manufacturing, you know, a big dip in this particular number. So look at when that was, 3 o'clock. Now, 3 o'clock is 5 p.m. MT4 time. Now, if we flip to, the first thing to note is that's a negative number. Now, manufacturing numbers that are positive suggest that companies are selling and they're doing relatively well. So you look at this number and you think, well, hold on a minute, how can it be that you get a negative number and the stock market rallies? So let's have a look at it first of all with the time correlation with the number, with the release of it. So you got 3 p.m. Let's flip back to the charts. And we'll go here. We'll go here. The FTSE 100 to start with at 3 p.m. So today that's 5 o'clock MT4. That's around here. So 5 o'clock on MT4 because it's 2 hours ahead. Well, that is. That's there. So look at the reaction. Down from resistance, just when the number's released, then all of a sudden everybody's like, oh, hold on a minute. A negative ISM number. So they start buying it up. Same with the NASDAQ. Down on the actual release, right on resistance, down on release. And then all of a sudden, only a half an hour later, the market starts buying it up. So what causes a negative number to make the market rally? Well, it's quite simple that quite simply that if the numbers start coming out weaker, it puts pressure on the Fed to slow down rate hikes because they are starting to choke the economy. So what people are hoping for is that the Fed will have to pivot positions or at least calm their rate of change. So they're not going to go at 0.75, 0.75, 0.75, because even though they've got to get inflation under control, they've also got to make sure that they have the least amount of damage while they're doing that. Otherwise, they could literally break the system. So when you see these types of numbers, what people are really sort of like, speculating on is the Fed may well start slowing down. Not that they're going to pivot position completely, but they might go 0.5 rather than 0.75. So interesting, mate. We had some, negative number, market rallies, and that's really why, that's sort of like what we see quite often, that people start kind of thinking what the next meeting might actually bring for the Fed, what discussions they're going to have. And manufacturing ISM is really important. It's a really important number. Hey, John's in. How are we going, John?
I've just sent a load of messages to Jeff. But basically, I've been away from trading. I've been doing a little bit, keeping out of the way. I'm dealing with visas, immigration, and are we staying here? Are we moving? If we're moving, how much is it going to cost? Are we going there? Are we going here? And it's I've never been this floating around. What are we doing in my entire life?
Right. Well, it's because you're there, mate.
I thought I'd just drop in now because the next 6 weeks I'll be away from the screens because I've got to be dealing with. It's complicated moving things from one new passport to another one. Helen's going back to the UK to settle her mom's estate and things. I've got to stay here. I'll be packing to go here. Once it's sorted out, we'll be down for a 6 months holiday. Hopefully, I think we can afford it. We'll go weeding.
Cheers, mate.
We're going to go weeding for Jeff.
Amazing, mate.
Yeah,
so good to have you back. George is saying, are you trading today? It's Independence Day. Is George in the room?
He might not.
I thought George, yes, he is.
Yeah, sorry. Yeah, I'm in the room. I was hanging around by the bus stop and I was wondering whether I should leave. That's why I thought, let me check. That's what I meant. No one had let me in.
Well, you are in, mate, and you're welcome to be here. What do we got, mate? What anything for you today? I mean, Independence Day, does that affect your decision making?
Independence Day on its own doesn't really affect my decision, but the fact, or rather, let me say, when the US markets are closed, doesn't affect my trading decision. But the fact that we are at the beginning of the month, I try and use those first 2-3 days of the month just to go back, review my charts, review my strategies, and see where I am. And the fact that we are spot on at the end of the first 6 months of the year begins to point out all sorts of things also on a price action basis, which I want to make sure I've got my charts on my charts. And I started speaking about that yesterday, but we only got a couple of minutes on the Sunday market update. So I'll just look at 3 charts and just tell you what I'm focusing on. But as far as trading is concerned, I mean, if you see a setup, you take a setup, right? But pretty busy with admin, so I'll be distracted. But the admin is on my chart.
You'll be having the afternoon off though, won't you?
Yes, definitely.
Yeah,
definitely,
totally.
And it's a fantastic opportunity to catch up with a thriller. You know what I mean? I don't know if you can see it.
There's no focus there, mate. No. The judges list.
The judges list. John Grisham, yeah. Somewhere.
Oh, okay.
Yeah.
Nice.
So yeah, I catch up.
I didn't know he was a trader, mate.
Well, he scares the living daylights out of you. Like what's happening in the market. But just a quick little thing on 3 charts here. This is what I'm putting on all my charts. So this is Euro Stock 50. So those top 50 companies in the Eurozone. Again, remember, a chart is a chart. So it's just the principles that you probably need to bear in mind. Half year, we've got the high of right up here, high of 2022. Down here, we've got the low of 2022. So I've put in my 50% of the range so far, which can prove to be a magnet. If the market starts to rally, that's going to be a key point where things will happen. And you can see it's spot on with this level here that the bears are going to defend. This is a key level on this descending bear trend line. Now, because we're in a bear trend, there's a lot more selling still to take place. I mean, these measured moves here are going to pull the market down. So if we break out of this trading range, whether we go up to test the descending trend line, I think the market will still come down. If we break down beneath it, then usual stuff, look for pullbacks and trade. And if you ever look at the monthly chart, this gets a little bit more interesting. I mean, this high of 2022, low of 2022, the measured move of that, what the bears want is to get a measured move of that, which takes us all the way down here. I mean, that's really going to be catastrophic for the markets, if we get down here. But that's what the chart is saying. There's a higher probability of us going down here than for us breaking to the upside. Lower probability. It can still happen because there's always someone on the other side of the market. But that I think is where the market wants to go. So a lot more selling, whatever the news we call it, crash, pain, whatever. So have a look at, we'll look at just a couple more. UK 100. So daily time frame. I mean, if you have a look at it, that trading range. So this sell-off here, bears would have wanted to get to the measured move. So that yellow line is just a cluster of all these hidden levels of support. But bears wanted to get there at this point. Failed, we got into a trading range. But a trading range is still breakout mode. The market will break out of that. If the bulls are strong enough to break out above that, then the bears are going to just wait. It's a trading range. If you're a bear, you're going to wait. So let the market get up and then I'll sell. Top of a trading range and see if it comes down here. Okay, if the bulls are strong, which is a lower probability, they have to break above that and give us, get above the all-time high, etc. But I think to this trading range, a higher probability that we still have to, the bears still want to complete their move, still want to get down here. So there's a little trading range. If we start to bounce off there, it might look for selling at the top of that trading range and take it all the way down. Of course, if you trade in the 5 minute, you can find opportunities. If you trade in the daily, your stop has to be quite high if you're taking daily trades. But I think that's what will happen. I have a look at the monthly. The measured move, this is quite an interesting thing. The measured move of high of 2022, low of 22 is really going to start to get us down here. And that means the bears want to test this little trading range here, and that's would be a huge drop. But that's why the market suggests. Is it difficult? It's not. It's just a couple of months. That's what happened here. A couple of months. I mean, there's all sorts of fundamental factors, COVID, that drove it, but the market got there. So who knows what might be the big catalyst, but it's possible. So it's not impossible to get down here. So I still think our probability, we're in a trading range, top of a trading range, a lot more selling, bears want to get down here. One last look, S&P 500, bear trend on the daily chart. Fantastic if you're looking for opportunities. I mean, on the lower time frame, there's no need to jump into here. Actually, just wait to see if we test that. So the bulls are strong enough to try and break above that to get a double top. Look for ways to get into the market short because of the bear trend, higher probability. You sell off this double top or off here, and the goal is to get down here. But if we look at what the bears want after creating this, their measured move is down here. Okay, they want to get here. That measured move is also supported by this little trading range. You know, this top here and the low that we got in June, measured move is down here. It would mean the bears would need to be strong enough to break beneath this channel line, which they would pursue, right? Because break beneath a channel means we'll have a couple more legs down beneath that. On a monthly, I'm sure if you're trading stocks and holding them, you want to hear this story. But high of 2022, low of 2022. The measured move of that, let me just move this here. Okay, high of 2020, low of 20, measured move is down here. The bears are saying, hang on a second, even if we get a little bit of a pullback, this is a tight channel on the monthly. If we break beneath this, they want to get down here. I mean, that's 2.4, 2.5 level to test these lows. So I think that's where the market wants to go. In terms of higher probability, that's where I would like to go. So when I go down to the daily, of course, to the 5 minutes, if the market is going up, you trade it up. If it's going down, go down. But my focus is not to miss any of those shorts if they set up. So that's what I'm going to do for the next couple of hours. Make sure I got all of these levels set up on all of these indices, and then just let it be, and we'll come in the market tomorrow. That's where I am, Jim.
That's really good and interesting, actually. Yeah. So potentially we are looking for the rally, which I am as well, and I'm with you. I think that ultimately this market's got another leg to come down. It's possible that it doesn't happen, but you just kind of look at all the evidence, and the fundamental evidence doesn't suggest that we are out of the woods yet. So there's going to be sort of another shock. There's going to be another announcement. There's going to be CPI inflation data that is just not getting under any kind of control, because they need really now the market needs some of these measures to start taking effect. Some of what the Fed's doing to start taking effect. And if they just can't do it, then what? I don't know whether they've got a plan B. Maybe they do, but if their plan A was effectively to print lots and lots of money before, I would suspect that their plan and basically let it get out of control. I suspect that their plan B, from here on in, or their new plan A, is just going to be to raise interest rates. They don't seem to be sort of having any other discussions right now, and I think that ISM number coming out weak makes the market a little bit more comfortable that the Fed won't go so fast, but they haven't mentioned anything to do with not going so fast. It's a complete assumption that they're going to change course. And can, as I say, that there's so much money sloshing around. I don't think they can't change. I think they're going to have to keep on the course that they're on. I think they're going to have to break what has been created before they can start to pivot again, and start to save people. If we think about the 2008 crash and what happened with the Lehman Brothers, it was pretty catastrophic at that point. Are we anywhere near that this time? The market's sort of like making a little less money, and some of these companies making a little less money. That's not that significant. It's when you get kind of like companies that are actually going bust and going broke, and then they've got to go to the Fed and say, we need some cash to stay alive. That's when it starts to get really dangerous. I think we're in it, really. I think the Fed will probably be relatively comfortable saying, market's slowing down, and we don't care about that. Just a little bit of reduction in their profits. Is that, that doesn't really matter. What will matter is if company after company start knocking at the door and saying, we need some liquidity, and
are they not doing that? Are we not there? I think we're
nowhere near it. We're nowhere near it.
There in a few instances here, I can tell you, because and the reason for that is COVID, not the supply issue per se. Because of COVID, think of a central business district who has, let's say, 2 million workers going to work every day. Suddenly, COVID arrives, and you've got 500,000 workers going to work every day because 1.5 million of them, or whatever I said, the balance of that, are at home on their computers. So they're not buying their coffees, they're not buying their lunch, they're not doing this, they're not doing that, they're not going into the CBD. So I don't know how that can be healthy for the economy. Number one.
that is fair, mate. But I I don't agree with it. But I would have thought that the Fed are worried about.
Go on, let's have a stoush then. Come on.
What's that?
I said, come on, let's have a stoush then.
Well, I wonder whether any central bank would be that bothered about the independent coffee shop. I think they seem to have
not per se, but if there's 500 independent coffee shops and 500 frock shops that can't sell their wares, and do you know what I mean? I think that becomes an issue.
Do you know what though? I would say it will only become an issue when JP Morgan's balance sheet, or the likes of JP Morgan's balance sheet, or accounts are suffering because they're the ones that invested in those small coffee shops. Because Wall Street really controls what's going on. Sort of like it's the kind of middle point between the Fed and everybody else. So if Wall Street and the like aren't affected, I honestly don't think they'll care. I mean, really, that'll become a government issue rather than a central bank issue, from what I would gather. And the government would have to go to the central bank, and yes, they're going to have to sort of, try and get some money to help these people out a little bit. But I don't think those companies will be significant enough to the all-round economy initially. And you're right, that sort of stuff can start to permeate. But they're so late on this stuff. I don't think they'll react straight away. I think they'll let a lot of those little companies go under, no problem at all. If it starts to kind of get a bit more ingrained into the bigger system and the bigger companies, then they're going to have people knocking at their door, because it's the behemoths that control the market, and to a degree, even though the Fed are meant to be independent, control the Fed. So I hear you, and I don't agree with their action. But I just don't see them really caring. I don't see them really sort of being that bothered, as long as the kind of big system, that their argument will be that it's to do with free market and those companies can collapse. But time and time again, they save the bankers. They don't seem to really be that bothered about everybody else, or most other smaller independent.
What a terrible world we live in. Isn't that horrible to actually understand that?
Yeah, it is, and it's sort of it almost becomes soundbite, but unfortunately, it's not soundbite stuff. It's this is the stuff that goes on. Who do they choose to save last time out? Because they didn't save Lehman Brothers, but there are other companies that they chose that they would save. And if they can let somebody like that go, then are they really going to care about John and Joe's coffee shop down, on the boulevard. I don't think they are.
No, they aren't. I agree in isolation. But if the high street starts, and you experienced it during COVID in the UK, where the high street was just closed down, basically.
Yeah.
Has that recovered?
In Brighton, it probably has. I'd say the rest of the country probably hasn't. But Brighton's got a very, it's got quite an outdoorsy kind of, it's got an outdoorsy kind of environment about it. So people will come here from London and everywhere else. So the high street can survive, in a place like this, because people will buy coffee and then they'll go and buy, certain clothing or whatever else. So there are pockets that will be okay, but I suspect, in the smaller kind of neighborhoods up the country, it's just not doing so well. This online is really sort of like the way that most people will probably interact with retail now.
To my point, yes.
Yeah.
What happens to the bricks and mortar? What happens to the bricks and mortar?
They haven't really come down.
Incidentally, would probably be owned by the Wall Street.
Yeah, but you know what they'll do? All they'll end up doing is, they probably would be owned by Wall Street. That's true, mate. But you know what happens?
So there goes their rent. They won't be happy about that.
There goes their rent. But then what do? They just go and say, well, I'll tell you what, building company, come over here and build us a load of flats and we'll make money out of you guys instead, because we're always in need of some property. So they'll find a way to make money out of the area, because it's not the company that's important, it's the land and what happens to the land to generate income. So I just don't think they'll do anything. I mean, it'd be horrible if they don't, because we do need high streets and people, having ideas and being given the opportunity to be the next Alan Sugar. But I just think times have changed, and from what
Lord
the Fed
Sugar.
have done, but it's just that historically they just haven't, they don't seem to care that much.
He's now the I don't know. Does he do apprentice in the UK?
Yeah,
he does. Right. Okay.
Yeah. Alan Sugar.
He's something else. Yeah. George, how about in Johannesburg, mate? How's the high street in Johannesburg? Is that functioning okay?
I think we're still in a kind of transition. I mean, right now the government has lifted all the restrictions on COVID, which is quite scary if you think about it, because the stats are still pretty high. So they're trying to stimulate the economy, but they kind of say drop the mask, do whatever, go for sports events, etc. But as far as business is concerned, take a step. 3/4 of the staff that were sent out to go back home are still at home.
Yep.
And to bring that workforce back is really the guys who couldn't get out of their huge rental properties or the buildings that they own. Those are the guys who are going to bring the guys back, because they're paying the bills anyway. But a lot of big businesses who were renting properties got out of, just declared force majeure and got out of their rentals. So there's huge properties that are empty. Some have been converted into apartments. I mean, talk of Sandton. I don't know if you've ever been down here. It's as plush and rich as any other little square of the wealth in the world. But the apartments that were going for, I mean, what in dollars, they were selling apartments for $1 million, $2 million. They're empty.
Yeah.
Completely empty. Huge towers, completely empty. And that's scary. Never seen that.
Yeah.
So I don't think that's going to be restored pretty quickly. And then on the ground, you talk to individual people. Guys are happy. Guys who work in banks, big positions, IT companies, they're happy to work from home. They don't want to go back to the building and say, I'm just as productive,
That'll be the key. I think, you might have hit on it. It'll be if the housing sector collapses, then there's big trouble. If the commercial system collapses, if property collapses effectively, there's big trouble. And there are signs of problems there as well.
Yeah, because a lot of huge listed companies who were just in property, I mean, they were making a fortune, but they're struggling.
Yeah.
Construction is down. And I mean, they were putting up all these high security residential areas that we all stay in. They are empty. You know, you could just see during, as we opened up after COVID, they got to finish the construction, but the places stay empty. So how do you maintain that? You know, it's just a domino effect. I think it will still take, I don't know, a couple of years to rewrite itself.
Yeah, I think it's going to take a long time. And with the markets, the indices, I think, are going to take a long time to recover as well. Once they do bottom, you know.
Yeah, I agree, mate. I agree.
I think it's going to be a long way back to the top. The one thing we do know about the markets is they always make new highs.
Yeah.
Always.
Yeah. Or we don't know. You're absolutely right. We just don't know when, do we? I mean, that's the thing. We just don't know how long it's going to take for this to come back. I mean, you sort of talk to people about the crypto market, and they're looking at potentially, 2 years before that starts to, flourish again. And it might be the same sort of thing with the markets as well. It might take a couple of years for everything to start coming back again. We just don't know how long it's going to take. And will it be? Is it Russia related? I mean, it kind of is. Is it COVID related? Well, it kind of is. Does that sort of start to level out to a degree, and the central banks are able to kind of affect the situation economically if those sort of situations calm down to a degree, or is there something else on that's about to hit that they really can't handle? I mean, that will break things? Are we at the point where what we've got now is enough to break the system?
See you, John. Cheers, mate.
I'll see you soon, John.
I've got to go.
Enjoy what is ahead of you.
It'll be interesting. They'll sort it out, and I'll be somewhere on the planet.
Get a good pair of gloves, mate. These weeds have got burrs in them.
Yeah, it's out of my control. They'll do whatever they're going to do. Guys, I'll see you in a few weeks' time. I've got to go and hit the paperwork trail and sit in government office queues.
No worries, mate.
Lucky
good
you.
Luck. Yeah. Good luck with it all, Johnny. Yeah. But really nice. Thanks so much for popping in, mate. And we'll see you in a few weeks when you're ready to get back on.
Yeah, I'm going to get my headspace clear.
Yeah, for sure. Right, not to trade right now, so I think it's wise.
Oh, no way. No chance. Oh, by the way, this is a quick check. You should ask George, maybe not on the air, but in a space, just ask him to look at one of his charts after he's done his analysis. I did his show a couple of Wednesdays back. I tell you what, it blew my mind. I thought I'd seen complication and analysis before, but it just blew my mind. It is worth looking at. It's very, very enlightening.
Oh, mate, thanks so much for that. I think that it's important that's said, actually, because it's quite easy for people to sort of like sit on the outside and it's for no fault of their own, but they don't really understand. They don't really recognise that. That George is a top analyst, and it's sometimes difficult to put that across. It's not always easy to put that across when you've got a very short period of time like this on air. So to have you say that is
if anybody's listening in, and they should take up that offer of that the free show for that one day and join in for the 3 slots, because once you see that chart, you go, oh, okay, this is why you're good at what you do, because you can see the amount of time and effort he's put in behind the scenes to make that entry, which looks, if you just look at his chart now, looks very easy, but it's not.
No.
Have a good time, guys.
Thank you so much, John. Thanks, buddy.
George, you've got to stop paying people to come on, mate.
That's why I was trying to miss today's show so that John could have his word without me going.
We've been saying that for a long time as well, John. Don't worry about that. We respect George for what he does. Very hard worker. Mate, have you caught your bus, or you missed the bus, or?
No. Today is a nice, easy day, so I'm happy. But thank you very much for having me on the show. Wednesday we're on for 45 minutes. This is still the first Wednesday. The long show is next Wednesday. We'll talk about that next Monday. So it's live trading profits on Wednesday, 9:30 a.m. GMT. 45 minutes this week.
All right, mate.
9:30 GMT.
Yeah. All
Which actually, what time's that in Sing? That's what people probably want to know.
That's 3:30, I think. Yeah.
3:30 Sing.
3:30 Sing for 45 minutes. Yeah.
No, it'd be 9:30. So it's going to be 4:30. 4:30 Sing.
Is it 4:30 Sing?
Yeah,
I'm
because
not
it's
arguing.
3:30 Sing now.
Not
It's at
arguing.
8:30 GMT now.
Oh my goodness. Okay. Yeah.
Yeah, that's good though, mate. So 4:30
All right.
Sing this Wednesday for analysis with you, and it's probably a really good week to do it because you would have done a load of analysis before it for the 6 months. So actually, probably be quite you'll probably be quite oiled. I would have thought well
I
oiled
think-
by the time we
I
hit
think I'll-
Wednesday.
Yeah, I'll be well oiled. Yeah.
Yeah, amazing. Thanks so much, George.
All right, gents. Take care. Enjoy. We'll
See you,
catch
See
mate.
you
Have
soon,
a great
buddy.
week.
Yes,
We've got
bye-bye.
David on YouTube. David, we haven't heard from you for ages. Thank
Oh,
you
brilliant.
for, and he's talking about the footsie. So there you go. Looking for a long on the 30-minute chart. Ash.
Okay. Long on the 30. Well, where was did David miss the initial entry?
I guess he was in late. Yeah.
Okay. All right. Let me bring up. Are you trading futures, David, or are you trading? I'm guessing the UK cash. Let me bring that one up. Let's have a look. There it is. Okay, sorry, I'd lost Zoom for a while here and here.
I'll
Right,
go back through
so-
that pound thing very shortly as well.
Cool, mate. Okay. So interesting, really, that we've, we had a head and shoulders followed by an inverted head and shoulders on the FTSE, and I'll show you what I mean. So this is the 30-minute chart. Now, if you look at this, you look at this on this here. So what we started out with, and this is why these patterns are so great, and this is why I really like them. So you got the head and shoulders pattern here. And this one gets broken down through this neckline here, down to the downside, and then the FTSE decides it is going to give us an inverted head and shoulders here, which is actually there's the head there. It just comes a little bit down, and then we get this. So yeah, I'm not going to call it that. So this one is there. Now, what's happened now is that we are effectively through this area here. That's the area we're through. Now, if you were to do a measured move on this pattern, then you could do it from here. Which would lead you back to the highs, or you might have to go a bit more shallow and see where the gap is here, which is possible as well. Now that's all starting to suggest that there might not be a lot of room left on the FTSE 100 now. But let's just bring up this and see what we got. So here's the trend line here from above. So let's draw the trend lines in and just see where this might well go. There's the trend line from above. There's the monthly pivot. So the monthly pivot's, it's knocking on the door of the monthly pivot. There's the pattern break there. So you could be going long here. And don't get me wrong, the FTSE is definitely bullish today. We're not looking at downside at all. Even if it comes up to this area here, I wouldn't be that interested in downside. I don't think this is the turnaround day. It might well be, but with the US market offline, we can focus more on the FTSE having a full day session. And I think that it's the chances that we go up and at least test this monthly pivot are high. So the question now is, where are you going to get in? Now, if you get in off the 30-minute chart, you've got a chance to get in here, 20 pips away. Not as attractive as this point here. If it could come down sort of, to maybe the daily pivot, maybe this lower trend line, maybe something like that, possibly the weekly, but I mean, you'll see this, Jeff. If this starts to come down and close under this point, and this is the thing, that there are permutations here that have to be considered. If this starts to come down here, all of a sudden kind of give you this bar off the weekly pivot, I'm presuming, Jeff, your anticipation will be to look for something like that, so you could potentially go short under here.
You bet.
So this is sort of some of the things that you don't want to see, you know, and so if you were to go long on the weekly, I think your target is probably the trend line. If you go long from here, your target is probably the monthly pivot and possibly this trend line up here. I can't see this being something that you would want to hold on to for too long. I mean, as I say, I might be completely wrong, but I think that there are a few permutations here. The market is definitely keen today. It's definitely bullish, but I think you do have to kind of consider where you're going to enter to try and get your pips today, because you could see something almost bearish start to happen, but get your pips out early enough to not really worry about it. You could even buy at the weekly pivot, take some profit here and see if it goes back through again, because it could still do that. It's keen enough to potentially do that. But you might have to make sure that you protect the lows with putting stops at break even. Now, if this does start to break down, then that's area number one. But this looks better. You know, I think you'd almost want something really negative to happen here, so then you don't get caught in that situation that we were just talking about. So even though I am completely with you, David, on looking for the long, I think that there has to be some idea about where the best place to go long is, because the market is bearish today, bullish for sure. But the market is overall, we're in a very bearish situation. So a lot of those buying opportunities are probably going to be, people are going to take profit early, I would think. And those that have still got their long positions on will see that potential move to the upside to maybe take less of a loss. So they might start liquidating positions as well. So we've got to be careful of the sell side. But yeah, you know, I think definitely looking for longs today, in my opinion, is the right direction. But it's just how you then play it. I think you've got two areas to look for a long, and that's here and down here. And this would be my favored point personally, because of the potential for this to do what I just said with a potential price action, then come down and potentially find some support down here later anyway. You know, so yeah, but just a bit of caution, mate, because as I say, like, you look at this on the daily chart, and this is coming down.
You can see David's answer, can't you, mate?
Oh no, let me pop into YouTube. Here we go. Oh gosh. Here we go. I'm basing it off the break back into a huge daily levels. So are you looking for? Are you looking for a long above this area here? Potentially, David, you'd quite like that, wouldn't you, Jeff?
Yep.
Yeah, so it could be a long up above here.
What's that red level we've got there? Is a weekly resistance one or
pivot.
something?
That's the monthly pivot there.
That's the monthly pivot. Then no, I wouldn't be looking for a long there.
It's difficult, mate. They're all quite stacked up. Daily, weekly, monthly. But
that
you know,
would preclude me from going long at that point, unless there's room for taking a bit of profit to get safe.
Do you know what though? I mean, you know, a lot of people will look at this and they'll say, right, the daily's below the weekly, and the weekly's below the monthly. That is a signal to be looking short. And I totally agree with that. I don't believe it's today. I think David's right on today. I think that today we should be looking to go long, but I think, you know, that particular situation is not particularly healthy for longs to really expand. I don't think we're going to get much of a run to the upside today, which is why I think, yes, you're going to get rallies, and I think that you need to pick your poison pretty sensibly if you're going to get into this market long.
Cool.
Yeah.
That's the FTSE.
Oh, Gary, sorry. Where's Gary? He said, let me in.
It's all right. I got him.
Oh, you got him. Okay.
Yeah. All sorted.
Sorry, Gary. We've still got this situation where we're only getting direct messages on here as well.
Yeah, can't help you with that one.
Okay. All right.
Oh, James is back from his ordeal, so we can have a chat to James about that.
Okay. All right.
See if there needs to be a rule change or something. I don't know. Are we ready for me?
Let me just finish off with a couple of bits, mate. I just want to sort of touch on my favorite currency this week, which is the Aussie, and probably my favorite currency to trade it against is the euro, but I also like the pound. So looking for short in euro Aussie, looking for short in pound Aussie as well. Looks like they're going to probably be raising interest rates again. Is it Wednesday they're due out, mate, or Thursday?
No, tomorrow, mate. Tomorrow.
Yep, perfect. Wednesday or Thursday. Tomorrow, got it. So we've got we got the Aussie potentially raising interest rates. Well, in fact, they'll be raising interest rates, won't they?
They'll be raising them. Yes, it's a matter of how much.
So long on the Aussie, long on the against the pound and the euro. I quite like. And let's just finish off with gold, because gold is still a little bit sticky. Now, I got in again with a long with gold here, and that makes my aggregate price right in the middle here. So I need some just a little bit of help here, just to kind of get gold up and on its way. But this was I've put stops at break even on the lowest point, because I think if it's coming down there again, it might well go. But look what we had. It was a decent move here. So we got this here. There's the trend line there. Nice clean touches along here. Probably that one could be moved down just a little bit there. So that's what we had. And on Friday, we started to move significantly lower. Now, this is the reason I think this stop's relatively safe. It might come down and pip me out and then go. Who knows? But I've put my stops at break even, because this now looks like a false break. Would you say, Jeff? I know it's a hammer in the end, but a potential false break here.
Yeah, it does. I mean, if you're reading the chart, you're going to see the double bottom and you're going to see the false break. So
yeah, you're going to like that, right?
Everyone's going to see that. So there's got to be buying going on. Got to be.
Got to be. Otherwise, if we don't have buying, then it's,
look out.
Maybe,
if there's no buying here, look out.
Yeah, well, so that's why stops are at break even on this third position, because, you know, if this breaks down, I don't think it's coming back for a little while. So let's see what gives there. But what we've really got now is a situation where this trend line needs to be respected, and the trend line could be a little bit lower. It might be the daily pivot, but this area basically needs to be respected. In actual fact, we could probably tidy it up a little bit there, possibly because of that low there. So we might have a little bit lower. Now, this needs to be respected. If it's not, as Jeff said, I think we could be in a bit of trouble. If it comes down, puts me out and goes, then at least I've got a couple of positions on, so it wouldn't be disastrous. But this needs to get taken out. That's the key. You know, I need to break this trend line, and if it does, then I can move everything to this point, even the top line to this point, make take a loss on that one, break that one even, make a gain on that one, and then sorry, the whole position will be at break even. So that's really what I'm going for now, mate. Still think gold is a long. I don't know what the catalyst is going to be. It's confounded me for quite some time now. Seasonally, it looks good. COT data looks good. Fundamentals look good. But what's the catalyst? I don't know. And it might
Chart
be that the dollar
good.
rallies. What's that, mate?
Chart looks good.
Chart looks good. Yeah, good point. Yeah, the technicals look good. So all of a sudden, gold's starting to get back into focus and start looking a lot more attractive. So let's keep our eye on gold, because I think this one is potentially there. Now's your opportunity, mate. You can get in now.
All right, mate.
And you can get a better price than I've got as well. So you can really lord it over me.
Look, no, I won't get a better price than you because I'll wait now. I'll wait for a higher low. If I get a higher low, then I'll join. I'll join the potential party. I'll see how that pans out. So I'm going to have to trade my system.
Yeah.
Regardless of what. So it just has to be a higher low for me. Channel on gold. Gary, have you got a channel there, Ash?
Let's have a look.
Sorry, I wasn't. Oh yeah, I can see a false break of a channel.
This one here. Channel there.
What chart are you on?
This is the daily.
I'm on a 4-hour chart. No wonder I can see a channel. Yeah, same thing. Exactly the same thing. So you're back inside it. It's a potential false break at the bottom of that channel and the lows. So yeah, look, as I say,
there might be something here as well. There, we're looking at that.
Definitely false break material.
This one here.
Yeah.
Yeah, looks good, doesn't it? Yeah.
I don't know if
that's
it's come back to test that yet, but
that's where we are. That's where we are with gold, mate.
Happy days. Actually, I got a message from a mate of mine who doesn't trade gold, but he trades equities very, very successfully, I might add. And he sent me an email earlier saying, and he's never, same as me, never bought gold before. And he said, gold looks good on my indicators.
Oh, nice.
So there you go.
Okay. All right. Well, it's maybe all stacking up, but we might have a week to wait anyway. We'll see what happens with that. But anyway, mate, so I'm done, and I've probably taken up most of the time. So let's get to you and what we're looking at.
All right, we'll go through that pound US dollar new rule of trading the pound versus dollar breakout trade. Again, because I have been asked, number one, and there's some people who weren't in the room at the time. Now, there's only 2 minutes left in this because this only lasts for 1 hour, guys. So we're not going to get an entry today. There's no risk about, so in 2 minutes, anything can happen, but I can assure you that the probability of this coming back to entry in 2 minutes is very, very low. Let me put it that way. So here are the rules. The rules are you isolate the Asia session. Now, the Asia session begins at 00 GMT, which is that bar there. It doesn't matter what bar, but as long as you're on the right hour, that's where it begins, right? So 0200 on most charts. So what you then do is get the range of Asia session, which today was the high right there. And I'll go a bit tighter. That was the high, and that was the low. So you mark both of those, and then you measure the distance, which is 30 pips, as I said before. What you then do is take the middle of that range, which is this 15 pip mark here, and that is where we will enter the trade. Now, it will depend on where price is at the open of London as to which direction you're going to trade it. If we're above the midway point, you'll trade it short. If we're below the midway point at London Open, we'll trade it long. And that will be your entry point, no matter which direction you're trading. Won't be an OCO, it'll only be one direction. So if you're above the midway point, you'll be trading it short. If you're below the midway point, you'll be trading it long. There's the hour gone. So we'll now cancel that. We'll delete the order because this is only good for 1 hour. Once the hour's gone, we're done. But they are, I think, going back, I think about 14 years when I was trading this. And I did a bit of research, and I'm pretty sure that is exactly how it was traded. But like I said, this is test material. And I think we'll get a lot more entries this way. There's no doubt about that. But whether it's profitable or not is another story. And we'll tweak this as need be to suit our purpose. Now, from there, you've got an entry, right? So we entered here short. And we've got to take profit at 1 to 1. I don't know why. Oh, that's the bottom of the range, right? So 1 to 1 is 30 pips plus a couple of pips of spread, right? So there's 1 to 1. That's our first target, at which time we would take half of the position off. Keep the stop loss where it is. Take half the position off. Target at this stage, and this is by trial, is going to be 2.5 to 1, because Ash and I did a bit of back testing months ago and came up with a 2.5 to 1 as the sweet spot. Again, if that turns out to be too far, we can change that. If it turns out to be too few, then we can change that as well. But they are the new rules, guys. Hope that's understandable. So get the range, Asia session, divide it by 2. That's your entry point. If you're above it, you're going short. If you're below it, you're going long. And your stop loss is at the top and bottom of the range, whatever the case may be. And your first take profit is at 1 to 1. Second take profit at the moment is at 2.5 to 1. Hope that helps.
It's a new system, is it, mate?
Yeah, it's kind of the old system. I think you remember going back probably a year or so ago since we tried to get this right. I said I used to trade this many moons back, and I couldn't remember exactly how I was trading. But I did a bit of research and went back in time and found that this was the way it was that I was trading it at the time. It doesn't really come back to me perfectly as to how I was taking profit, because my own system has now come into that, of course. So I don't remember where I was if I was taking profit. Maybe I was trailing. I don't know. I can't remember that part. But at the moment, because of the research that we did, we're going to use 2.5 to 1 as our target and see how that goes. If it turns out to be a 5 to 1, then we'll change it to 5 to 1. See how we go.
Cool. Okay.
But today, no entry. So there you go. Boring as batshit. But guys, just test it over the week on your demo accounts, or at 0.001% or something, and see how you go. I'll do the same if I can. Now, you've got my order that has been triggered. Is that entry at the moment? That's $CAD. If you haven't got that, you want to follow it. It's at 1.2865. I've been slipped by 0.6 of a pip. Gotta hate that. In a market that's not moving, why the hell would you get slipped? Fair dinkum.
Good point.
Brokers.
Oh, no worries. No worries, Marlon. Marlon's got internet issues. He's got a big thunderstorm where he's at.
Oh, okay. That's a worldwide phenomenon at the moment. Australia's east coast has been absolutely pummeled again by rain and wind and all the rest of it. Except down in Tassie, we haven't got that, thank goodness. So that's $CAD. The take profit levels are just before the monthly pivot, and we'll organise a TP2 or a target at some stage down here if we're fortunate enough to get through TP1. I will scale into this if we get a break of the monthly pivot and a retest of the monthly pivot. So I think that will be the place that I actually want to make the money from. This is a little bit early, this entry, I believe. I'd much prefer to see that as my entry. So we'll see how we go. Now, on the weekly game changer bars this week, there were there were 4, I think. 1, 2, 3, 4, 5. I'll just briefly go through them. Aussie Kiwi short, which goes along with my analysis. Well, it is analysis, but it's more, I know what happens regularly when Aussie Kiwi gets above $1.10. And it's this. This happens when it gets above $1.10. That's been going on for 10 years. So whether this is the moment or not is another story. I guess we've got to put that resistance area in, and it's probably there-ish. Have we reached it? Not sure. So I just don't know whether this is the right time, to be fair. But we do have a weekly game changer bar. Problem with weekly game changer bars is this: they have to be in context. So we have to have a major chart pattern, a dominant chart pattern that's telling us that is really the way to go. We don't have that. We've got a range at the end of the day, but we're at the top of it. So that's a good thing. We've had a preceding high that was also a game changer bar, and a significant game changer bar, that one. That's really something. It's been backed up by this one. I would like to have seen, to be honest, that level challenged, and that may well yet be the case. But it's there. If you want to trade it short, then it's there. The thing that would stop me is not so much that it's too quick, but it's that level there. And I'm trading straight into it. So it doesn't make any sense for me to go short here. So I'd much rather see that level tested and a much friendlier candle in terms of size, so that I can actually get some profit in the bank before I hit that level. So that's a no from me. Swiss yen, one candle reversals don't do anything for me at all. It's a pause in the market. It may be going short, may not. So that's a no. Euro yen, not dissimilar to Aussie Kiwi, actually, but it's a pretty convoluted potential top here, and it's a spinning top bar rather than a clear key reversal bar. So again, that's a no for me. Euro dollar, too close to the bottom of the very, very strong and long trend for me to be going short here. That's just not a possibility. In fact, I think this can actually rally this pair. How, why, fundamentally, I absolutely don't know. But I think this is a buying area rather than a selling area. So I certainly won't be selling that euro dollar. And there's one more, my old favorite, dollar yen, pops up every now and then, like every second week. Beautiful little tweezer top sitting there, I've got to say. Where? It's in the middle of nowhere. There's really no resistance here at all that I can see. So I certainly wouldn't want to be shorting this at the moment. Although my bias says yes, my head says no, and the chart's telling me no as well. So it's a no from me as well. I do have a watch list, however, and it consists of, I think, 3 or 4. Euro Kiwi is the first of them. That's already gone, but that's not how I wanted to trade it. Yes, it is a game changer bar from Friday, but then we had one on Thursday that was telling me the opposite direction. Then we had one on Tuesday that was telling me the opposite direction. So this is in a complete kerfuddle as far as I can see. You'll probably notice there's one false break, 2 false breaks. Is this the 3rd false break of that range? And I'm counting on that being the case. But to trade this, I want to see price come and close below the monthly pivot, come back and retest it, give me the lower high, then I can go short. Is it 3 little Indians? Well, the answer is not yet. But if it does turn out to be 3 little Indians, which are 3 false breaks with consecutive higher highs, then I'll be looking to trade it through the bottom of this range. To where, I don't know. But that will be the key. The key will be it'll break the bottom of this range and go short. But for how long, I don't know, till it hits support. Pound Aussie, I've been watching this for 100,000, well, weeks anyway. And the reason I like this so much is because of what I perceive to be a very, very close imitation, if you like, of the sentiment cycle. Those of you who know what that is will probably recognize this as a first warning, overt warning, then we go into exactly what we want to see. If that's the case, and I can't give you a reason why this would happen fundamentally, can't give you one possible reason, but this is the wall of worry. If I'm right, and I'm following the sentiment cycle, and I'm looking for an aversion point or another higher low here. And if I do get that, I'll be looking to trade this long. As I said, fundamentally, it's very, very difficult to see the pound outpacing the Aussie, but the chart's telling me something different. We shall see. I traded this short last week, as you'll recall, and we got a TP1, but that was as good as it got. Or did we get a TP1? I can't remember. Anyway, we closed the trade. And the reason for that is I was looking for that aversion point. And I think I'd much rather trade this short than long at the moment. But there's no short there for me. But it's certainly on my watch list. And if it does set up, then I will trade it short, but probably only down to this area here. There's only one more to go, and it's euro pound. Euro pound, we were trying to track this last week as well, based on this candle here. And we're just flirting here. There's nothing happening. So what I want to see is price get back into this area and retest the top of it. Give me the lower high, and away we go. You can see there on Friday that bar is fairly substantial in its purpose. Didn't want to go above that 87 mark or 86.90 or whatever it is, wherever it finished. I'm expecting that to come back into this range and give me that lower high. If it does, then I'll be looking to trade that short. That is my watch list for the week. Is there a best one? Look, I think it's Euro Kiwi. Euro Kiwi is my fave. Should I have got into it earlier? No, because it's too early for me. I've got to follow my system. And my system says, close below the monthly pivot, come back here, give me the lower high, then I can go. I think that's my best one for the week if it sets up. We'll see how we go.
Like it, mate. Okay, great stuff. Well, let's close it up and be back Thursday. Obviously, we won't be having the theatre full of thoughtfulness by the sounds of it for a few weeks, but that's okay. We've got plenty to talk about. Have a great week, mate.
Say that again. Sorry, mate. I missed that.
I was just saying we won't have the theatre of thoughtfulness, will we? Because John's going to be out of action for a while.
Well, so are we in a couple of weeks. We're having our...
yes, we are.
Summer holiday. Break. Yeah, summer holiday. Cool. That's the one. Yeah. Cliff Richard. That's right.
Well, we're on for Thursday, and we'll be back for them. But have a great week, guys, and we will see you Thursday. Always get involved if you feel the urge to do so. You can hop on camera, or you can send us a message if you want to come on and look at specific charts. And you know, if you got some specific questions or comments, then we're always all ears. So you know, as Jeff always says, this is really your show. So if you want to get involved, then obviously feel completely free to do so. If you just want to sit back and learn and just observe, no problem with that either. But have a great week, guys, whatever you do and whatever you choose to trade. Thank you, Marlon, for looking after us. I know you've had a few issues, mate, but thanks for hopping back on and trying to stick in there. And, of course, thank you to you, mate. Have a great week, and I will see you Thursday.
Cheers, mate. You too. And thank you all for being our trading buddies. Gary, yes, opening of Tokyo FX market is correct. Have a great week, guys. Bye-bye for now. See ya.